To build anything that truly lasts, it takes time.
Hello and welcome. You tune into Market Fatafat with me, Ankita Saxena, and with me as always is Sharad Dubey. And for the next 1 hour, we'll take you through all the buzzers in the trading session on the back of news flow or on the back of technical charts. But first up, let's see what the market looks like, what's the construct. Sharad, the selling has intensified post 12 o'clock. In fact, we're sitting at the lowest point of the day for Nifty and Nifty Bank as well. And broader markets also that were outperforming in the morning are actually underperforming with cuts of almost 1%.
Exactly. The problem is for the third straight day, Ankita, there is a fall happening in Nifty. There was a recovery, but then all the recovery is actually lost and it has gone into below 24,700 levels, and that was a very, very important support level which we were talking earlier in the day, and now that level has breached. So of course, it's not a moment to panic as a trader, but definitely the points which you are looking at, the closing will be very important to look at, especially in the day's trade. Sectoral performance, if you look at it, most of the sectors are in the red, barring FMCG and pharma, certain packs. Nifty Bank also taking a dip of almost 400 points and trading at the day's low, roughly 56,110 levels. And of course, the culprit is Kotak Bank, which is dragging the overall banking names in the Nifty Bank index. And as Ankita had pointed out, broader indices are also not supporting the markets. Nifty mid cap, Nifty small cap indices are actually taking a beating as well. So we could see a proper selling happening across the segment as well. But stock specific earnings impact is something which we would be actually tracking. And two important Nifty earnings is also there, IndusInd Bank and BEL, which would be in focus as well. Now joining us, we are having Samit Chavan, the Head of Research and Technical Derivatives at Angel One. Good afternoon, Samit. How's the markets actually looking like if you have a look? Overall, do you think the construct is going towards the short side or we are going into a consolidation?
Well, good afternoon. If you look at it from a short to medium term perspective, then yes, the trend has shifted, the tilted downwards slightly, and witness a glimpse of the weakness on Friday itself. The kind of price action that we have been witnessing since last 5 to 6 trading sessions, there was some sort of sluggishness, fatigue at higher levels. And importantly, today we are witnessing a follow-through selling wherein some key levels were reached. As far as Nifty is concerned, 24,900, 24,800 has been broken. Importantly, Bank Nifty, 56,200 we were seeing as a key swing low, which has been broken nearly 1.5 hours back. So that has clearly intensified the selling pressure in banking names also. If you look at the mid-cap index gave a decisive breakdown from a sort of head and shoulder pattern on Friday itself. And today, after seeing good gains in early session, we witnessed a sharp nosedive in the entire mid-cap space. So clearly, at least in the short term, we would see some pain, extending from here on. As far as levels are concerned, we are seeing range of 24,500, 24,400 as a crucial support level for Nifty, and for Bank Nifty that support lies somewhere around 55,000 to 55,500.
Alright, so those are the important levels to watch out for. But let me get on board our researchers as well. We have Rabinder and Kanishka who are joining us on the research side. And of course, we have Samit on the technicals. And without further ado, let's get started with all the buzzers in trade then. The first up is Laurus Labs. And Laurus Labs is one of the top buzzers. It is trading up almost 6%. It has hit its fresh 52-week high. Now, this is on the back of the fact that the Andhra Pradesh government has allotted 531 acres of land to set up a pharma unit with a planned investment of 5,630 crore rupees and 6,350 jobs over the next 8 years. Now remember that Laurus Labs is sitting at an all-time high. In fact, Laurus Labs had come out with its earnings last week and a strong set of quarter 1 numbers that the company had posted, and the brokerages have come out. They are maintaining, Motilal Oswal is maintaining a target price of 970 versus an earlier 860 rupees. So that's an upgrade in the target that's coming in from Motilal Oswal. Antique has also come out with a note. They have set the target price at 700 versus a 520 earlier, and they're maintaining a hold. So there's again a hike of target price by Antique as well. They remain constructive on Laurus's long-term CDMO opportunity. However, the near-term visibility remains limited with no large contracts for steady commercial supplies yet. So that's the word coming in from Antique. But nonetheless, an upgrade coming in and a big contract that's coming in the way of Laurus Labs, and that's up in a way more than 6.5% in trade.
Well, Sanketa, in a falling market, a stock has jumped almost 7%. That is Laurus Labs. But moving on, realty space, that has taken a big beating. The Nifty Realty Index is one of the top sectoral losers, and stocks such as DLF, Godrej Properties, Lodha are seeing a massive selling pressure. Now, interestingly, the realty stocks, why they are going down, I would like to point out there's a weak commentary which has come from Lodha developers. Apart from this, do remember Q1 and Q2 are not seasonally strong quarters when realty stocks would be in focus, and this time, because of early monsoons also, there has been certain delay in collections and launches as well. Now, demand is also moderating, and certain price in certain areas across the country itself, they are seeing a stabilization happening. And of course, there's good news for the realty segment that will start kicking in from the third or fourth quarter when the festive season comes. And also, there's a decreasing interest rate scenario, so do have a watch for the housing finance companies as well. Data from Anurag also came that they have stated the housing sales have actually dipped 20% on a year-on-year basis for the current quarter, which we are having under discussions. Of course, DLF, Godrej Properties, and all the realty stocks are seeing a basket selling in certain segments as well. Samit, DLF would be in focus as well. What are you taking out of DLF? Is there any value emerging because of this dip? Recently, there was a news flow also that they had a sellout for their Mumbai's re-entry after 10 years. Their projects were there in Andheri. So, what are the technical charts suggesting when it comes to DLF?
See, clearly with key indices correcting a bit, most of the high beta names and specifically realty space has seem to have corrected sharply in last 3 to 4 trading sessions. And today, since morning, we are seeing massive selling in DLF after opening below its important swing low of 815. So as far as technical structure is concerned, at least in the short term, we can see lower highs, lower lows on daily time frame charts. Although it is now approaching its key support zone of 89 exponential moving average place around 790. We expect continuation of this move at least towards 200-day simple moving average. So around 770, 765, we are seeing a strong support zone for DLF.
Alright, moving on from DLF on the charts to a counter that is in focus today on the back of its earnings, and that is also tanking away. Is a CDSL that's down and out almost 4% in trade after it's posted its Q1 numbers, and it saw a cut of almost 4% on a year-on-year basis as far as the net profit is concerned, which is coming at 102 crores versus 134 crores in the on a year-on-year basis. The revenue also saw a very marginal uptick of 0.6% on a year-on-year basis, but the EBITDA was down 15.5% on a year-on-year basis at 130 crores, and the margins were also down 960 basis points at 50% versus 60% on a year-on-year basis. Now, a couple of highlights that the company had highlighted is that CDSL became the first depository to register 15.86 plus crore demat accounts as of June 2025, and during the first quarter of FY 25-26, 56 plus lakh new demat accounts were opened. So that's the operational update also that CDSL came out with. But on the back of weak set of Q1 results, CDSL is tanking away in trade with cuts of more than 4.5%.
Yes, significant selling coming in the capital market theme stocks also, and CDSL numbers we can see. Technically, what are the charts suggesting, Samit, when it comes to CDSL? There is more pain in the offing, or will it go into another round of consolidation after this? What are the charts suggesting?
No, in fact, it went into a consolidation mode recently. If you look at its price action for last 1.5 months, it was trading in consolidation mode. But on Friday itself, we saw some glimpse, and stock managed to breach below its important support of 1650 on a closing basis after nearly 2 to 3 months. So it clearly suggests that at least in the near term, we are likely to see further pain in this counter. There's a key support, sacrosanct support around 1500, which is the 200-day simple moving average. But the kind of price action that we have been witnessing since last a week or so, it says that the stock is likely to slide below 1500 as well, and there's a cluster of support around 1450, 1400 for CDS.
All right, so that's CDSL on the charts as well. But coming to you then, Ravinder, you've picked up Bank of Baroda for us, an earnings candidate. Take us through what does the report card for Bank of Baroda look like?
Well, yes, Bank of Baroda has announced their Q1 number, and company reported interest income at 31,091 crore with an uptick of approx 5% on a year-on-year basis. And if we talk about NII, then NII was down by 1.5% on a year-on-year basis, and PAT also saw an uptick of approx 2% year-on-year basis. And if we talk about deposit, then deposits saw an uptick of 9% year-on-year basis. And Avendus Spark has come out with a note, and they have upgraded the stock to buy from ad rating and hike target price to rupees 316 as compared to earlier target price rupees 245. So overall a mixed set of number of Bank of Baroda. So back of the stock is in focus, and the stock is down over 1%.
Well, interesting stock, Rabinder. But Kanishka, BEL stock is in focus, new entrant to Nifty index as well. They are coming out with their earnings also, but the stock is taking a beating ahead of earnings. Stock is down more than 2% odd. Kanishka, what is the important preview coming in? What are the expectations we are factoring in?
Expected to report its results later in the day, and on a year-on-year basis, it's going to be a strong quarter is what we are expecting, with double-digit growth in revenue, EBITDA and net profit as well. As per our ET Now poll, revenue may rise around 15% on a year-on-year basis to 4,825 crore rupees. EBITDA could grow 23%, whereas margins, they could improve to nearly 24%, whereas the net profit that may increase 18% to 917 crore rupees. However, on a quarter-on-quarter basis, numbers could drop, over 50%. In fact, due to high Q4 base with peak year-end deliveries in the previous quarter. Now, on an annual basis, growth is expected to be driven by healthy execution, high-end margin orders, and support from defense, electronics, government capex, and Make in India push that the government has been giving. Order inflows are estimated between 7,350 crore rupees to 8,500 crore rupees, which would take the total order book to nearly 75,700 crore rupees, which ensures solid visibility going forward. However, there are some key risks as well. Execution pace and supply chain, they remain some of the key monitorables. Now, apart from that, the company has also signed a contract with the Ministry of Defence valued at 1,640 crore rupees. Now, these are the two reasons why the stock is in focus today. However, ahead of the earnings, it is trading lower, as you said, about 2 odd points lower.
All right, so we are waiting and watching out for the earnings, and that's weighing the stock down for now. But let's slip into a short break. After the break, we're getting you more buzzers on the other side. Stay tuned.
Welcome back to Markets Fatafat, and now let's move on to the important news flow coming in from Tata Group. Tata Trust boards underway meet to discuss the strategy for various Tata Trusts. This is ahead of Tata Sons annual general meeting next month. Anurag Joshi is here with the details.
The Tata Trust board meeting is currently underway, and one of the key points for the trust would be to take stock of the progress of Tata Sons, in which Tata Trust has a 66% holding. The progress Tata Sons has made with regard to the RBI requirement on the listing. Now, Tata Sons has a September 30 deadline to fulfill the RBI requirement to list its shares as an upper layer NBFC. The Tata Trust board is discussing the strategy for the various Tata Trusts, and the board meeting is ahead of a Tata Sons annual general meeting next month on August 14. Now, the Tata Sons shareholders will need to ratify Noel Tata as a director of Tata Sons at the shareholder meeting. Noel Tata was named as the chairman of Tata Trust on October 11, 2 days after the demise of Ratan Tata, and he was named a director of Tata Sons in November 2024. Now, certain media reports have indicated that Uday Kotak and lawyer Behram Vakil may join as directors on the Tata Sons board. According to the RBI rules, Tata Sons has a September 30 deadline, and it's classified as an upper layer NBFC, which means that it requires more regulation from the RBI. Tata Capital, another upper layer NBFC of the Tata Group, meanwhile, is going ahead with its plan for an IPO.
All right, Anurag, thank you so much for joining us with the details of what can we expect from the meeting that's underway as far as Tata Trust is concerned. But let's get going with all the stocks that are in focus today. Samit, let's come to you then first. You've picked up KPIT Tech for us. On the charts, how does the counter look like to you? Because this counter hasn't really done much. In fact, the entire IT pack has been reeling under pressure. And KPIT Tech specifically has been an underperformer. So on the charts, what are you penciling in for KPIT Tech?
See, clearly it's been moving in tandem with its large cap peers. We have already seen a breakdown happening from its recent consolidation phase below 1220, 1240, which was acting as a very strong support zone for this counter. So now the next support lies in the zone of 1100 to 1050. So at least in the near term, we are likely to see this weakness extending in the stock until the time this stock does not surpass 1300 on a closing basis. Every rise is likely to get sold into. So at least in the near term, one should avoid any kind of bottom fishing in this counter. And as I said, if it does not surpass 1300 in coming days, then yes, 1100, 1050 levels are likely to be retested.
Yes, important levels to watch out for when it comes to KPIT Tech. But the problem which arises that is coming in for the India's electrical vehicle manufacturers, be it the two-wheelers or the three-wheelers, of course, like Bajaj Auto, TVS Motors, which would be in focus. Now there's a fear coming in as per reports that there might be plant shutdowns because of shortage of a crucial rare earth magnet inventories. They're expected to run dry by July 31st as per industry reports, and industry resources are revealing that several OEM players are teetering on an edge with only days of rare earth magnet supply left. Of course, Ministry of Heavy Industries also has butted in and stated that there's a recent demand directive coming in is that most of the OEM players should maintain a sufficient inventory levels for this rare earth magnet, especially because it's a very important component when it comes to the manufacturing of the EV segments. Now, both the PLI and the PM E-Drive schemes are now on hold until the Chinese restrictions on rare earth magnets get resolved. So there is some problem still brewing when it comes to the EV players in the two-wheeler and the three-wheeler segment when it comes to the rare earth magnets.
All right, moving on then, Rabinder, coming to you, you picked out one from the Tata pack, that is Tata Chemicals, an earnings candidate. Take us through what the numbers look like.
Well, yes, Tata Chemical is in focus. Their company has announced their Q1 number, and company reported revenue at rupees 3,719 crore as compared to 3,789 crore, which was down by approx 2% year-on-year basis, and EBITDA saw an uptick of more than 13% year-on-year basis. If we talk about EBITDA margin, then company's EBITDA margin was up by more than 230 basis point year-on-year basis at 17.5% as compared to 15.1%. And company said that the India UK basic chemistry and specialty products has driven operating performance, and margin increase due to lower power and fuel cost and the cost rationalization initiative. And the soda ash demand supply balance continue to be soft in the short term owing to the tariff changes and excess supply across the region. So back of this, Tata Chemical is in focus.
All right, so that was the last talk for the day. We completely timed out on this edition of Market Fatafat. Samit, Rabinder and Kanishka, thank you so much for taking the time out and joining us. With that, it's a wrap on this edition. Sharad and I will take your leave. Thank you so much for tuning in. Don't go anywhere. Market action continues on ET Now.